Hey guys, this is Eric Bramlett with Bramlett Residential. Today is June 8th, 2023, and we're here to discuss the Austin real estate market statistics for May of 2023. We always like to run these stats a little bit early and get you guys first look statistics so everybody can know what's going on with the market. First thing I want to discuss is what is prevalent in most news sources today, and that is the general consensus that real estate is in trouble. And I received this newsletter from Axios a couple days ago. Headline is "One Big Thing Cratering Local Real Estate Prices." Axios is a great publication. I think they do a really phenomenal job, and they're not saying anything different than you see with most of the pubs out there. The fatal flaw with this thinking is they're looking at one metric, and that is year-over-year average sold price. Some of them also look at median sold price, but everyone is looking at year-over-year pricing. They're not incorrect. Year-over-year pricing is down, and when we go to our market stats, you'll see that year-over-year pricing, total sales are down 12%. Average sold price is down 11%, median is down 14.5%, and then we looked at also at average sold price per square foot and median sold price per square foot. Both of those are also down, minus 15% and minus around 17%. Not a surprise at all. May of 2022 was the absolute peak of the pandemic market. So we should be a little bit lower. We know that real estate has corrected a bit. Before we move on to discuss what we are actually focusing on, I like to point out months of inventory is at 3.5 months of inventory, and average days on market to sell are 57 days on market. Two things to take note of: 3.5 months of inventory is a balanced market. Means that sellers don't really have a lot of leverage. Buyers also don't have a lot of leverage. It's somewhere in the middle. It doesn't really feel that way. And that is evident in the average days on market of 57 days on market. It takes sellers about 2 months to sell a property, and that's why it feels more sluggish than the balanced market that the statistics show. So let's move on to the month-over-month pricing, which is what we like to look at. So month-over-month will show you which direction the market is heading. So while we saw an 11% drop from May to May, we actually saw a 10% increase from the valley, which was in February of 2023. So prices decreased considerably from the height of the pandemic market to the valley of, let's call it the post-Fed rate hike market. They decreased pretty substantially in the 20 to 25% range, but they've bounced back some. We don't attribute that to any sort of market spike or a big market correction back in the other direction. You can attribute most of that to seasonality. We feel like this is the market normalizing and buyers and sellers behaving as they usually do in a normal seasonal market. If you look at median pricing over the past 12 months, month over month, you see something relatively similar. When you look at median versus average, generally speaking, median will be a little bit smoother, and that's what you see here. Not quite as much of a bounce back from the valley in February of 2023, but still bouncing back a little bit, and also indicates that we are in a normalizing market. Looking at contracted units year over year, that will show us the best leading indication of market demand. And contracted units are almost at 100% of last year's contracted units in May. So May of 2023, we were at 99.5% versus May of 2022. What that shows is that there are buyers that are in the market. They are buying. They're paying less for homes than they were a year ago. Why is that? The reason they're paying less for homes than they were a year ago is because interest rates are higher. Interest rates in June of 2022, May of 2022 were in the 5.5% range. We're at 6.5% now. They actually peaked up above 7% last month for a bit. They're dropped down to about 6.9% now. But if you look at the average price, the monthly price to pay for the average price home in the Austin Metro, it's almost exactly what it was 12 months ago. So $45.54 this month, 12 months ago, $45.59. It shows you that buyers typically do purchase based on the monthly payment, not necessarily just the purchase price. Moving along, since we're in a normal market or normalizing market, we like to show everybody that market seasonality, which Austin is a consistently seasonal market, and you will see that in May, June, that's whenever buyer demand starts declining. It doesn't decline a ton, but if you look at where it is in the peak in April, you'll see a steady decline all the way into December, and then it picks back up in the following spring, late winter, early spring. What does this mean for you as a seller? It means that if you need to sell this year, you need to get competitive with price now. You need to do what you have to do to get your property sold this year, because you will see demand just consistently decline. What does it mean if you're a buyer? Well, you haven't had as much leverage as you have now in probably a decade, and you will see things get a little bit better for buyers between now and the end of the year in terms of buyer leverage. You'll probably see less homes on the market at the end of the year than you will now, and you'll see those homes sort of, the inventory will decline a little bit as the year goes on as well. But you will see homes more than likely sit on the market longer than they are now, and you will see motivated sellers drop price, and you will see things get a little bit better for you as a buyer. Want to remind everyone what real estate is all about, and that is long-term wealth building. So in Austin, Texas, homeowners own their homes on average for 8 years. That surprised me a bit whenever I learned that. I assumed it was 4 or 5 years, but it's actually 8 years in Austin. The national average is 12, by the way. Austin is a bit of a transient city because we have so many tech workers here. So the average homeowner owns for 8 years. And if you look back 8 years ago, in May of 2016, it was $345,000 was the average price. Today it's $605,000, and if you annualize that appreciation, it's 7.26% average annual appreciation during that time. Very consistent. Austin historically has appreciated at 5 to 6% every single year. I'm not sorry, every single year, but on average over the past, I think, 30 years. So it looks like we're returning to that sort of long-term average. I hope this is helpful for everybody. If we can help you with your specific situation, please reach out to me. I'd love to chat through it with you. Again, I'm Eric Bramlett. I'm with Bramlett Residential. I hope you found this helpful, and I hope you have an amazing, amazing week. Thanks so much.